For more on this, we're joined by Osama Rizvi. He's an energy and economic analyst at Primary Vision. Welcome back, Osama. Now, we've seen a significant reversal in oil prices this week. Is the market pricing in peace before it's actually happened?
Well, the market, I think, is pricing in more uncertainty moving forward. And when you look at the current market structure, we saw that a lot of players, retail investors and institutional investors, they took profits on their positions that was taken a few weeks ago. So I do not think that this fall in the oil prices hint towards any sort of resolution or positivity in the fundamental structure of oil markets. And I think moving forward, until or unless we have a binding agreement, not an MOU, a binding agreement, the chances of oil prices increasing are much higher than them decreasing.
And tanker traffic through the Strait of Hormuz still remains below regular levels. Are shipping companies telling us a different story from the one oil prices are telling us?
Indeed, shipping companies, the actual physical dated frontline Brent prices, the product markets, all these three aspects are telling us the actual story on the ground and what is going on. If you look at Hormuz, like the shipping traffic, even from the peak of what we attained during the MOU period, it has fallen even below that. It's 7, 8 shipping vessels passing through Hormuz. That is almost nothing. And one thing that to look at is China is expected to increase its imports in the coming months. And that is going to sort of collide this low oil narrative, and we are going to see higher prices moving forward.
Now, the resumption of exports through the Caspian Pipeline Consortium has also eased supply concerns. How significant is that development for the global oil market, given the volume that it handles?
I don't think it's quite significant. If you look at Kazakhstan's crude and condensate production, it has already fallen from 2 million barrels something to 1.63 million barrels. The chances of further attacks on refineries or that area are still high. It only handles around 1% or 1.5% of the global oil flows. So I think it's a drop in the sea. And yeah, it's good for some temporary shift, but not a fundamental factor.
And we're also seeing ships continue to transit the Bab el-Mandab Strait despite the ongoing security concerns. Does that indicate confidence is returning, or are shipping companies simply adapting to a higher risk environment?
Well, this is very interesting. If you look at the recent data from Saudi Arabia, we saw that before the Houthi attacks, around 3 million barrels per day of oil was transiting through Hormuz. Now it has fallen to 1.5 million barrels per day. So even if the vessels are going, the first thing is that the volume they are carrying is not as much clearly before the attacks. Secondly, I think some shipping tankers or vessels are taking the risk. This will continue to go on, but volumes speak more than the shipping containers at the moment.
Right, we'll leave it there for now. Osama Rizvi, thank you very much as always.